to just click through a list of preset advisors or indicators that you may have created or acquired. Well, let's go into setting up the workstation, and we'll go, from there. We'll build on it. I always say the grid off is just much more friendly to the eye, and we will start with a daily chart. We'll set that up as such. Okay, and that's about the view I'd like to see, and I always set it so the chart has some empty void here, because I allow my analytical side to see where price should be reaching on the next price swing, hopefully. Okay, now we will add another chart. Okay, again, removing the grid. This time we're going to have a 4-hour chart, candle. Okay, and we will add another chart. Removing the grid, and this will be a 1-hour chart, candlestick. Okay, and lastly we will add a 15-minute chart. Okay, so we have our daily, 4-hour, our 1-hour, and our 15-minute bellwether chart. Okay, and that is your 4 major time frames that you want to monitor. Now, what I do with the daily is I simply look for large reaction levels. Obviously, this is one here, this is one here, 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 and we're presently unfolding one in here. And here's a low and a high. Now, at all these critical points, they have the potential to create a bounce or rejection when price trades to those levels again in the future. So if price were to reach up to this level here, we would reasonably be expecting a decline at that level of resistance. Vice versa, if we see price trade down to this low in here, we may see a bounce higher. Okay, so that's what we do with the daily chart. So you really want to be monitoring the price swings and setups and fibs on this chart for intermediate term or even long-term trade setups. For the 4-hour, okay, we're going to bring in our tools. Okay, you want to go and pull up a fractal. Now, fractals are basically the swing highs and lows, and all MT4 platforms have a preset area underneath that you go up to insert indicators down to Bill Williams, and you scroll down to fractals. Click on that and select the color you want to use. I like that one, and plot it. Okay, and then you have your fractals to do your analysis on market flow. Okay, Now you want to do that also on your daily chart. So we will drop that indicator in on the daily as well. Okay. And the 1 hour, we will do the same thing and add the fractals. Okay, so now we see all of our swing highs and lows on the 3 major time frames that you look for. Now you can plot the market flow on the 15-minute chart. I don't simply do it because all I need to know is the 4 hour and if the daily or if the 1 hour is in agreement or in sync with it. So looking at the 15-minute chart, this is where we enter our pivots. Okay, and I post the pivot daily macro. And what I'm doing is I'm toggling so it shows more than just today. So in other words, when I'm done setting this up and I post the lines on the chart, it's going to give me the pivots, the major pivots, the R1, R2, S1, S2, and the central pivot for all of the days. So I'll be able to see the last several days on one screen what the pivots were. Okay, we are going to delineate the days. Okay, so now what we have, these are pivots for today. It's the central pivot. Okay, this is R1, and here is S1. This is a new trading day. Here is S2 from yesterday, S1, central pivot, R1, and R2 of previous day. Okay, this is the trade that I want to highlight. Okay, so what we're going to do is we're going to add one more chart just for clarity's sake. We're going to add a 5-minute chart because it's going to allow me to illustrate how I traded this setup. Okay, candle, and a 5-minute. Okay, real quick, we're going to drop the pivots in again on this chart. Okay, and delineate okay. Alright. Okay, this was this afternoon, London going into New York. Okay, and what we had here is a cable reaching up into a midpoint. And this is the central pivot. This is R1. Okay, and what we'll do is we're going to drag a fib real quick over the two pivots. And you can see the 50% retracement level comes in at 1.6005. Call that the figure, 1.6000. Okay, full figure. Just remove the fib. Okay, so we are going to drop a horizontal line representing the mid pivot. Okay. but we are going to drop it down and show it laying on the figure. Okay? Notice how that figure also overlaps with a New York session high from the previous day. Support here, resistance here, resistance here, going forward, here we are again. Okay, so price trades up to a midpoint between central pivot and R1, trades down, and starts to rally back up. Here's where we start to talk about optimal trade entry. Okay, this is a 5-minute chart. Okay, we would have anticipated, let's pull up a daily chart real quick. We would anticipate prices to at least attempt to make a move down, only simply because we've had several days up in market action. We would reasonably expect markets in this condition to trade back at least from profit taking, and plus we're going into the second half of the week, so a lot of traders that have went long would have looked to square their positions and go flat in preparation for the weekend. So going back to our 5-minute chart, we saw price break down in here, and for this day here we saw price set up a swing trade using this high here. Remember, we looked for a midpoint in here that we're not noting on here because I just want to have the chart look crisp and a little bit more clear to read. We used the figure, this old high here, which is a session high, and price traded down and then bounced up here as it was retesting the figure in here. Now, what I want you to notice is we are going to take these pivots out for a moment. We'll bring them back in a moment, but just for right now I want to take them off so I can highlight the optimal trade entry. What you want to do is you want to grab a fib, okay, and since we saw the price trade up into here, now if you didn't have the courage or the, well, for lack of a better word, the courage really, just to go short on a bold-faced bullish candle in here, you could look for this pattern to unfold. You draw a fib from, in this example, the high, and you drag it down to this reaction low right here. Okay, so we're referencing this high here and this low here. Now, as price was trading up, this is what you'd be seeing. Okay, right about there you'd be looking for the fib to be drawn. Now what I want you to pay attention to is zooming in grab that level I didn't want to. Bear with me, guys. Try and make it so you can see a little bit easier. Alright, here's the 62% retracement level and the 79% retracement level. Okay. Between the 62 and 79% retracement level, these are called deep fib retracements. The reason why it's a deep fib retracement is between this high and this low, the furthest portion of the retracement is taking place almost all the way back to 100% of the swing. So deep fib retracement would be 62%, 79% retracements. In between the 62 and 79%, this is what I refer to as a sweet spot, okay, or optimal trade entry. In this area here, you can have a very uh, definable uh, price to look to go short in this example. So we had our setup, price traded down. We want to see confirmation, okay, and still have a very clear level of determining risk. Because here, once price traded up here, I mean, granted, we blew out this high here, looking for a turtle soup or 21 bar candle high fake out or false breakout. This is a pattern I trade a lot, so I went short in here, traded it down, took profits at this high here. So I didn't catch that move here. I just got out here. But when price traded back up, I actually went short in here on this candle. I used the 62% and 79% retracement level. I used 50% between that level and this level as my entry. Now, when you enter in this little region of 62 and 79% retracement, you want to use the previous reference point or reaction high. In this case, we're showing short, so you want to use this reference here. You want to go at least 10 pips above this high here. Okay, so looking at that, using the figure, okay, as a basis for our example. We're not going to use my fill because I want you to use all the tools. I kind of fancy danced in here a little bit, but this is when you would have really, using my methods, would have taken the short. So I had to ride out all of this mess in here, and then it stabbed up one more time, pulling back to the 79% retracement. And using that, you want to go short at the figure, 1.6000, and 10 pips above this high here. Okay, would give you a relatively 1.6020 would be ideal. I know that's 11 pips, but we'll just use that as reference. So your stop would be in this region up here. Okay, so between 160.20 and 160, you have a 20 pip stop. Okay, notice you're not having to use a 50 pip stop, a 100 pip stop, or anything like that. It's very definable, very clear. And if price trades above this high, chances are the trade's no good. And you could even look to save the stop if it gets up to here. Like if it goes like to 115 or so, you can just bail out and get out of the trade and trim your losses and use some loss mitigation applications. So anyway, going short here, we would be looking for our first extension, which was here, and as price traded down to it, we bounced a little bit in here, traded back up to these lows here, this low here, which are session lows, by the way. Refer to your support resistance videos where we talk about Asian session, London session, and New York session highs and lows. They are major reaction levels in those trading sessions. So again, support and resistance is not ambiguous, it's very clear. And we made a reaction high here and traded down, really broke down really nicely, and down to another Fibonacci extension. Bounced in here, created another bear flag. There's a bear flag in here, bear flag here, bear flag in here. Price really fell off the table in precipitous price action, and I had a longer term. I was looking for Friday to give me this exit, but for whatever reason, the report that came out this morning, 8:30, really swung things in favor of the pound dropping hard. So, when the U.S. Report was released, it just gave a lot of steam to the selling pressure. So, 158.50 in here was a level I was looking hopefully for Friday to bail me out, but it really paid off and gave me a pretty pretty quick exit for today. So again, that was It was unexpected, but still, appreciated, and I'm glad I, was able to get that. Now, I wanted you to see how price. See this low here? This is a session low. Notice how we traded up here, and we've had difficulties trading back above it. And then price pushed through for Asian session tonight. And now we're trading back down in that same level. So the question is, are we to bounce and trade back into yesterday's or New York session range, or are we going to meander and trade down below it and retest the low here, or Asian session low in here? That remains to be seen, but this was the move I was waiting for this week. I did take a swing trade on the long side. Actually, two of them. I took two trades in here. Let me get this fib out of here. Okay, I went long in here, and using that same optimal trade entry concept, oops, sorry here. Okay, this low here, price traded up into this area, and it started to retrace. We're looking for the 62% and 79%. Here's your 62. Let's trace that over. Okay, and one level below that is 79, so you want to use between 62 and 79% retracement midpoint. That is the sweet spot. You want to go long there. Stop will be 10 pips below, at least below this low in here. Okay, and this is a low of, well, we already know the fibs there, so let's take that out for a moment just so I can get this level for you on screen. Okay, the low was 159.17. So 10 pips at least would be 59.07. And 159.08 was the low here. So even 10 pips below here, you may have gotten stopped out with the spread factored in. But ideally, you want to use at least a 10 pip stop below the low here. But obviously, you guys know that I like to use a 30 pip stop on standard trades. So unfortunately, this this trade here, as it started to move forward here, I brought the stop up to this level in here, and it came down, stopped me back out. I used this point here and here for a retracement level to get back in long, and the upside objective was using let's take our fib. Okay, we're going to reference this swing here and here. So what we're going to do is we're going to take the low, and what I'm doing is I'm taking the fib, and we've done this before in other videos. I'm taking the fib, make sure I'm on the low. Okay, so I'm taking the low in the previous reaction high. See this swing here? From here to here. So this high here to this low here. As price trades up, once this high is penetrated to the upside, and we're looking for a swing trade intermediate term, price would reasonably expect to see a repeat of this move in terms of pips higher. So 50% down here. If we take that same magnitude and go forward in time up, here's 100%, or a duplication of this swing here, nailing the absolute high here. But again, looking for this high as a retest and the figure. So this was a move that I got stopped out at a break even in this area in here, and then I had a secondary entry in this level here, getting out at the figure 160, and then went short using optimal trade entry in here and bailing at 158.50. Presently I am flat, and price is, it's just now getting in the area where we're trading at the session highs and lows. Now, I'm not talking daily, I'm talking like Asian, New York, and London session highs and lows. We're looking for those reaction levels in here to take part in whether we're going to swing higher or lower. Going into Friday, after a pretty wild week, we could see some choppy action and some consolidation. But hopefully you guys have gleaned some insight from this first installment of Optimal Trade Entry. And with that, guys, I wish you good luck and good trading.